so it's a new trading week, and definitely a lot has played out so far in this trading month of June. But let's look at portfolio construction for Nigerian investors right now. And joining me for this conversation, we have Taufik Subair, Senior Investment Research Analyst, Pathway Asset Management. Good to have you on the show. Good morning.
Good morning.
Yeah, so it's another week, another dollar, another naira, at this point. What do you think makes a resilient portfolio? Right now, I'm already getting complaints from some investors now saying, I just got into the market and it's dropping right now, talking about the NGX.
Yeah, so looking at what has happened in June so far, we have seen retracement in asset prices. And that takes me to your question about what does it take to construct a resilient portfolio. So whenever you want to allocate your capital, you need to look out for some certain parameters. Like you need to check some certain boxes. You want to know this portfolio I'm building, how prone is it to inflation? Is it going to be defensive when it comes to inflation? You need to check that. How is it going to react in a high interest and low interest environment? You need to also tick that box. So by the time you answer all of those questions, you will be able to come up with some certain investment selection that is going to make you to look that is going to be very supportive to you in a down market like this. Because imagine you deploy your fund in a fundamentally sound stocks. Those stocks, they can be trading lower intraday, but by the time the market closes, they go back to the previous day price, meaning your capital is going to be preserved regardless of whatever the events looks at in the market. And by the time the market move into the positive side, you are going to rebound and start making profits.
Right.
That's what it takes to build a resilient portfolio that can withstand volatility.
Right, and definitely, we celebrated Father's Day, and we have a lot of fathers out there, trying to turn 1 naira into 2 naira or into 10 naira, to take care of the family. And definitely, they have to make that investment decision, at this point. What for you is the best diversification plan? So that our dads can keep making profits?
So when it comes to diversification, I don't see investment in isolation. So I believe whenever you want to invest your money, you need to tie it to an objective. So that objective is what is going to shape the way you invest those funds across asset classes. So when you pay attention to your investment objective, that's going to help you to come up with the best selection. So in terms of diversification now, you need to look at your liquidity need. So what we do as a business in Pathway Asset Management, when we want to onboard our clients, we allow them to go through some certain procedures. We want to know what their objectives look like. So that will help us to know how to match their assets to the liquidity need, such that we don't invest short-term fund in what's it called, in equity, for instance. That imagine you deploy some fund in equity at this time and you need to make your use of your money any time. So it means you are going to be booking some certain loss. So going through that procedure make us to know the best asset class that works for them as an individual, and that helps us to balance out and diversify their investments across several asset classes.
Right, and looking at percentage at this point, if you're trying to allocate your investment, how much percentage should go to fixed income? How much should go to equities? How much should go to risk assets like cryptocurrency?
So when it comes to what's it called, the allocation now, right? So the way I look at it, I believe is not going to be it can be relative across individual. But if I want to categorize this into two categories of individual, so I'm going to say on the one side I will look at those people that are conservative, and on this other side I will look at those people that are aggressive. So if you are conservative, you want to put your money in fixed income space, like maybe like 70% in fixed income, while you do risk assets 30%. But if you are aggressive, then you need to go long in equity, because that's the only way you can actually build sustainable wealth over time, because you are investing in businesses, you need to understand. And in as much as those businesses continue to exist, they are going to create value over time, and that is going to, give you a decent return in the long run. So imagine you want to build a portfolio and you want to tie it to an objective of maybe your retirement plan. So it means you are not saving for the short term. So you are going long. That will enable you to know that whatever the market is doing now is not your business. It is even giving you more opportunity to buy more cheaper. So it shapes the way you look at the markets, in as much as you can identify your objective for investing.
Right. All right, dads. Tie your investment to something. Plan for retirement, because that time will definitely come where you can't work.
Definitely.
So you use what you've made, so far, and those investments, hopefully they can keep you going.
Very well.
But for the days you're not working. Thank you so much, Taufik Subair, Senior Investment Research Analyst, Pathway Asset Management. Thank you for coming on today.
Thank you for having me.